Good day, guys. Welcome to Forex Walker. Welcome to episode 45. So, here we were talking about what I call compression and expansion. When volume comes into the market, it breaks out of the channel that which it was compressed in. So, it breaks out. So this is what I call volume. I told you that the formation of an order block is volume. That's why I call it volume. So once we break the previous low, collecting the stop losses here, and the market breaks above. In fact, after it breaks below, it has to break above. There's no way in which it wouldn't. And normally the bullish trends, it breaks above first, then it breaks below, and then you get the test here and the market takes off. So when you know the direction of the market, it doesn't matter where it broke, if it broke above or below, it doesn't matter because you know what macroeconomics is telling you. So this is something that I wanted to tell you about. This is an order block. The market is supposed to take off from here. So right now I'm showing you how we trade the global supply chain pressure index. So here it says the 5th of June 2023. It is not June, it's actually May. Let's go back to the global supply chain. This is the global supply chain. It talks about May 2023. It's not May 2023, it's June 2023. Why? Because look, here it says August 2025, but the economic report was released on the 5th of September. This is the day that I'm recording this is it's on the ninth month, which is September. It's the 7th because it's Sunday. The market opens at midnight. So you can see that that is September. So here we're gonna be looking at the two dates. It says May 2023 and October 2020, but it's not October, it's December, and this is June. So when the market comes to this level, we look at macroeconomics and we call this the turnaround because we're monitoring the global supply chain. In fact, the global supply chain is directly proportional to the commodities or the high risk currencies. So here it says the 5th of June and volume comes into the market. This is volume. So after volume had come in, it tells us that, check the date down here. It tells us that it's the 5th, where is it? It's the 5th of July 2023. And on that side, it tells you that it's the 5th of June after the turnaround. Let me show you. The turnaround is right here. It says June, but it's not June, it's July because the economic reports are telling you about what happened on the previous month. So this thing is delayed by 1 month. And so I highlight the highs and the lows of the candle, and that's how I hold it. So this is the correction that we were doing here, and the expansion is right here. It expanded below and above. This is a Wyckoff schematic, and this order block goes here. This is where the order block goes. You hold this baby until it goes to heaven. Let me show you where heaven is. Let me show you. Heaven is all the way up here. So you need to hold two positions. uh, One position should have a larger lot size. In fact, this is three drives to the top. I don't know why the South African Rand JPY. I don't know why the South African Rand is actually, remember, I told you that this is the first touch, the second touch, the third touch has to manipulate. And when it manipulates, it tells you that there's volume in the market. And once you get this volume, in fact, you just set up a buy stop above this level. Remember, you trade with two positions. You when the market goes up there, you move your stop loss and you get stopped out on one position. The other position collects the swap. But here my broker does not allow me to trade this. So you set up a buy stop, allow the market go drop as much as it wants, and you're going to take profit from up here, and that's one of your highest points. It comes back with that one position that you have, and you hold the position. This is some kind of an order block. Hold the position and it goes all the way up there. Nobody gets a free trade. All of those trades are tricky. You're gonna get stopped out, and if you get stopped out trading the global supply chain, I recommend that you don't come back into the market. The trend takes a long time to reach its. It takes almost a year to reach its. Let me show you. I don't want to lie to you. It takes almost a year to reach its target. So we started this trade on the 5th uh, on the 5th of June 2023. The end of the trade is that just look for this highest candle 28th of June 2024. So from 2023 June, the 5th of June, all the way up to uh, the 28th of June 2024, this is the whole year. So for those who were asking me what kind of trades are you taking, I'm a carry trader, and in carry trading, what you do is that you trade long term. So here we have volume coming into the market as we're monitoring this baby. It says the 5th of November 2020. On the 5th of November, let's go back to the global supply chain. Here it says October, but the economic reports are telling you about what happened on the previous month in the global supply chain. So it's the 5th of October, but it's actually the 5th of November. And when we get that peak higher in November, this economic report was actually released on the 5th of December. So the entry is on the 5th of December, and the monitoring of it, or what I call a turnaround, was on the November the 5th, and the entry is on the 5th of December. So don't worry guys about this confusion, but here you can see that it's the 9th of September, it's the 7th of September, and here it says August, so we're delayed by 1 month. That's the reason why when I point at October and I say November, and I point at November, I say December, because this thing is delayed by 1 month. Okay, let's go back to this boy. We were busy monitoring this baby. We had some kind of an FVG that we cannot see at the moment, and the market came back to this baby. It took off. This is that 5th of December that I'm talking about. Let's see. Okay, it says the 7th, so we don't have the 5th. So we're going to use the 4th because the next candle says the 7th. So we're going to use the 4th of December 2020. This is the candle that which we mark the highs and the lows of it, and we're planning to hold the trade. So the trade came down to some kind of an FEG that I cannot see. It came back here and it took off. Let me show you how long the takeoff is. Let's look at the date. The date is the 13th of June 2021. It's actually the following year. Let me see. Yeah, we were talking about December, so it's the 12th of June. I don't know what I'm looking at here. The 11th of June 2023, and the market takes off. You need to expect the pullbacks because the market will eventually get to the take profit level. So here you take profit with the larger lot size and you leave the smaller lot size, and you come back, you put your money in on this order block again, higher lot size, and you get it to the take profit level, and you can actually hold this baby again because it does not stop you out from your entry here, and you can move forward with the next beauty. So do you guys remember this guy, the euro Turkish lira? So the Turkish lira is the currency in Turkey, and the people who think that they are Europeans, in fact they are Middle Eastern, and they joined NATO. I don't know how they joined NATO. Perhaps there are some kind of a link in the Middle East, and they're going to help the Middle East with the fighting, or that they're going to help NATO with the fighting of the Middle East. I don't know what the strategic move was. So they actually want to join the European Union, but they're not Europeans. So here they actually call them Semites. So here I was down here and I told you that this shoulder has to be broken. We pretended to be breaking it here and we actually broke it. And this is the bullish move on the euro that I was looking forward to. And at the moment, the euro is actually pricing in some sells, and I believe that on this day, this is the 5th of September, we got this peak, and I believe that the trade will actually start from here. If it continues to break these lows, I will hold a sell from here to the 50% fib, and when the market comes back, I will wait for it because my job is to hold long term, the as to collect the swap from here long term. My entry is actually here. So this is 1184.08 points in swap. This trade can only be held in shorts, downwards. So I'm busy receiving some negative or some downward economic reports on the euro, and I'm happy with those, even though the euro had given me a lot of bullish economic reports, but I still believe in this trade. This trade happens every single year, but it happens once a year when the year is moving towards the closure of the year in the southern hemisphere, and it happens because of the tourist arrivals in Turkey. So here, that will be the entry. Remember, when I enter the market, I enter it like this, uh, on the previous shoulder, or we can actually use this previous shoulder instead, or we can have two previous shoulders. Let me show you. Remember what I talked about when I said volume coming into the market. Volume is when the market breaks the previous high, this shoulder, and it breaks the previous low, this shoulder, and that means volume. That means the economy or the market makers are pricing in volume into the market. That means they're trading because they're taking other people's stop losses from above and below. So that means the trade is ready to be traded. So I will sell it when it comes down here. If it breaks this low, I'll wait for a tiny pullback and I'll sell it. So this is a trade that we're looking forward to. We want to collect that 1000 swap, and will be okay. So goodbye, guys. We ran out of time in this video. We'll see you on episode 40.